Good morning. Well, it's the final countdown. Just 4 trading days remain until the end of financial year, so tax loss selling of those underperforming stocks on the ASX is set to continue today. Now, all this comes at a time when global equities slammed their foot on the reverse pedal overnight after coronavirus pandemic resurgence fears re-emerge, with the World Health Organization expecting the outbreak to get much worse, with some hospitals running out of medical grade oxygen to treat patients. On top of that, the IMF has forecast global growth to shrink 4.9% this year, not as dire as the OECD's forecast of a 7.6% fall though. Meanwhile, the IMF forecasts Australian growth to fall 4.5%, slightly better than the OECD's forecast of negative 5% growth for Australia. Now, stocks linked to the economic recovery, like airliners, fell the most overseas, also taking a blow after quarantining orders were put into force in several US states. The S&P 500 took a sharp 2.6% haircut. The Nasdaq lost about 220 points, or 2.2%. The oil price plunged 6% to $38.04. Gold eased 0.2% from its 7.5-year high to $1,772 an ounce, and copper fell 0.3%, while iron ore last traded at $102.90. Now, taking everything into the equation, the Aussie share market is eyeing a fall of 1.6% at the open. So expect cyclicals to come out of favour and see heavy selling and defensives to somewhat stand a little bit tall. Now, what else to watch? Well, CSL announced it will buy an exclusive global licence or to commercialise what's called adeno-associated virus, or AAV. Now, this is a gene therapy program, a program that's currently in phase 3 clinical trials. Now, this is a huge announcement, as this could be the first gene therapy to provide long-term benefits to patients suffering from haemophilia, and would also eliminate the need for ongoing therapy, which is exceptional news. Secondly, Qantas has entered into a trading halt pending a capital raising announcement. It's also announced that it's set to break even or make a small underlying profit before tax in fiscal 2020, which is good news. But it will write down $2.8 billion in significant items in their full year result. Now, thirdly, oxygen companies and companies that could be needed with the second COVID wave, like Medical Developments International, MVP, and small company ResApp, RAP, as well as ResMed, RMD, are expected to see a rise in demand. Now to 3 trading ideas. Well, Select Harvest, SHV, is touted to possibly buy RFF's Mooral almond orchard. Now, Select Harvest could possibly buy the asset for $85 million, which could improve Select Harvest yields and income. Now, Select Harvest was reiterated as a Bell Potter buy. Secondly, Sonic Healthcare, SHL, which has been doing a lot of COVID-19 testing, which has a high margin or high profit margin for the group, had its EPS upgraded by a massive, wait for it, 35% by Citi. That's an EPS upgrade, exceptional 35%, but expect a fall next year. Now, Bell Potter upgraded the stock to a buy. It's also a buy, and has been a buy for some time, for Citi. And thirdly, Qube. Qube is their code. The port and bulk logistics leader signed 2 leases with Woolies in Moorebank. Now, Qube's balance sheet is very strong, cash over $1 billion. Expect earnings per share of 2% this year and 8% next year. Citi subsequently downgraded Qube from a buy to a hold. Plenty to think about today. I'm Jessica Amir with Bell Direct. Stay safe. Happy trading.